you hear me now? Man, I don't know. First live stream of the year, and I'm already running into a lot of issues. But it looks like we should be good now. Throw me off for a loop. All right, so we have a 10 minute let's start here, and I'm not sure if I can be heard everywhere else. I think I'm okay right now. And then I know you probably got like 100 notifications. So bear with me 1 second here. Yeah, nothing really goes as planned, does it? All right. Well, I didn't want to show this for now. All right. So I was too focused on trying to make sure I get everything right, get everything together. Okay. So welcome back. Happy New Year, everybody. I'm sure most people probably log off right now. They're like, man, screw this. If he doesn't even know how to get on a live stream, how are we supposed to watch this? He's supposed to be a professional. But hey, we all run into some issues. I think I did a modification. I want the output for the stream output. I think I modified a little bit, and then it did not work out the way it's supposed to. But anyway, I think I got it to be working now. It seems to be stable, at least for now, which is very good. So, yeah, without any further delay, let's go over what's going on this week. So, this is the New Year academic calendar. Usually, right around this time, I usually will order this, but I haven't ordered it yet. So, I don't have the new calendar for the new year yet, so that should be coming. But anyway, we have a lot of delayed, obviously a lot of delayed news here, news event. So they're all delayed. I mean, we're not in the government shutdown anymore, so I'm not sure why this has been delayed. I mean, I know why, but it's outside of the scope of the stream. Let's just say they are resetting the economy. Let's just go with that. Okay. So not much going on this week. Um, I mean, it looks lately when it comes around 8:30 or 10 a.m. news, there's literally not even a blip on the radar. So it really doesn't matter now at this point what those number means. So we do have the non-farm payroll. Excuse me. We have the non-farm payroll on Friday at 8:30. I'm not gonna. I'm not expecting much. Okay. Let's see here. Yeah, let's take a look. Yeah, let's take a look at the fuel ingredient index. See where we at. So right now, everybody's on neutral. Yeah. So again, this is kind of like related to the VIX. So the VIX has been dropping steadily. So the lower it drops, the more you're gonna get this into the greed and the greed extreme greed area. Let me show you what I'm talking about. So we're talking about the VIX. I mean, it has not been dropping that much now. It's just been on the range bound. Let me zoom out and see the border picture. Yeah, I mean, compared to, let's just say, compared to December, it's been steadily rising, but nothing to alarm about. It's when there's huge spikes, that's when, people usually panic. But yeah, if it's under 18, under 20, it should be, or under 25, it should be more than fine. It's when it gets over like 25, 40, that's when we may run into some issues. Okay. Let's see here. Looks like everything is bullish. Most people can kind of like see which direction the market is going, except for the Dow, of course. The Dow is like a poster child. He does whatever he wants. To be honest with you, I'm more agreeing with the Dow that is supposed to drop. But hey, it's not up to me to decide where the market should go or whatnot. So that's where we are at this point. Let's see. Um, so there's since the market opened, there's been a couple divergences. I mean, especially like right at around, I'll say around 10, 11 a.m. So the ES had like a big drop, but Nasdaq said, we're not dropping. So Nasdaq was just keep on pushing. Okay, so Nasdaq is not having that. I said we're gonna keep going higher and higher. Have all these relative equal highs I need to get to. Let's go, baby. All right. So when it comes to seasonal tendency, nothing too surprising here. I mean, my only surprise is that it's just for the first week of January, it usually steadily goes up. And then we have like a small drop, like right around, I say, toward the end of January. So it's been a sharp increase. Let's just say that. With sharp increase, usually there's a sharp drop. So be careful with that. So like one, we did not get a good Christmas rally like we anticipated, but so the market is steadily going back up again. All right, so we have the seasonal tendencies. So the way I'm going to do the stream, I'm just within the seasonal tendencies, kind of take a look at what's going on throughout the week from a macro perspective, and then we'll dive into the micro, meaning the charts and place a trade, and then after that, we'll go over some news that may impact your trade throughout the year by looking at a economist journal, kind of like providing some prediction for the rest of the year. Very ominous, very ominous. As you can see, I have taken some trade earlier this morning, very small trades here. This is a 60 minutes. Doesn't look like much gain there. I just been kind of like impatient with the market. I'm always impatient when it comes to the market. Impatient in the sense that when I get into a trade, if it's not taking off, I'm like on the side to take it out. Like I can't take it, especially after that short drop here, like on one. It was on 11 or 10 a.m. Like it was a very sharp drop. Yeah, it was around 10:40, 10:30, 10:38, 10:39. It was like a big drop. And this is usually why I have my stop loss like really tight for a big drop like this. And I'm going to show you the drop that I'm talking about. Oh, now I'm on the daily. Let's go back into the 1 minute so I can show you the big drop and kind of like show you why I always have my stop loss like really tight. There you go, right there. So in another screen, I had a long from this level here, which is 25,888 to go up. Okay, because it seems like it's been a very short retracement and then go higher. It seems like that's what it's been doing. So I said, I don't want to miss out on another move. Let me get a quick scalp from 825, 888 to go up. Guess what? The market did a sharp drop. The thing is, normally I usually put my stop loss here, but I traded up all the way to here. So the loss wasn't massive, pretty much. So I suffered a small loss here, and I was able to get back. I already know that the market is gonna go back up because it quickly dropped. Let me show you. It it dropped like it wick, not even drop. It wick below this, so it wasn't a break market structure for me because it has to be like a complete candle. Like if it was like a big red candle and it dropped like all the way to here, maybe like right around this area, then okay, I'll be like, alright, so they are taking it lower then at this point. But now it was just a wick and it traded higher than this level here, slightly higher. So I'm like, you know what? Let me get back into it. Yeah, you can't be scared, man. You gotta jump in at both feet. You gotta jump in both feet. So I said, you know what? It's trading higher than this level here. And I'm trying with my mouse here, but it's just very slow on my end. So I said that it traded up higher than this body's candle. Um, it dropped lower, but not low enough to clear those bodies here. So I said, yep, they're taking it back up. This is to stall everybody out that was long from here and to kind of like clear them out of the market. Yeah, this is kind of like what this algorithm does. This is one of the scenarios for me when I suffer a loss like this. I'm like, yeah, whatever. Okay. So now we are back into the 1 minute chart. I might as well just put on the trade. So when when you're trading, there's different style of strategies you have to apply. You cannot just be a one trick pony. I mean, you can, but you're gonna miss out on a lot of moves, and then it's just gonna very frustrate you. So when you have the market going up so much, I mean, the market's been down for a while, been down and out for a while. Okay. So the one thing I'll take a look at is okay, was the last drop candle? What was the last down drop candle before this high was broken? So I kind of highlight that candle right here, and I say, all right, what was the move? What was the drop down candle that in that propel price to go so much higher? Okay, so I'm looking at this candle and I'm also looking at this candle right here. So because price has been going up so violently, um, and it seems like it's kind of like relentless, so I usually choose or prefer not to go short because it might give you a very unpleasant surprise. Like for example, at this level where it's at right now, you might say, "Oh, okay, maybe it's gonna drop lower to go higher." It may not. So it may just get into that gap right here and then just resuming higher. So, which is why I'm avoiding shorting at this point. It's so I don't want to say finicky, but it's just kind of weird. And then if you don't know or you navigate your way around, you're gonna get burned quick. Even though the price action is really nice. So this is one of the things I said when price is very difficult, very finicky. Yeah, sometimes you have a little bit of a leeway to get out of a bad trade, but when price is trading so nicely, it goes from one end to another without any problem. You are wrong very quickly. You have very little room to make adjustment. Okay, so right now at this point, I will just stand still, not do anything. Like you see, I mean, even the market itself is just standing still. There's not much going on. There's nothing enticing. It could go up, it could go lower. Like you don't know. I don't know. I mean, if you do know, please let me know. What will lead you to believe that's just gonna go higher and higher from here without retracing lower? Okay. But one thing I know for sure, and we all don't have a crystal ball, and we do not have high connects that can let us know what price is going to do next. An individual candle, 1 minute candle at least. So I know it's gonna go up, but the thing is, I want to be able to get in at a level with the least retracement as possible. So to me, which is why I said there are three areas of entry. So let me make sure I can zoom in. Okay. So to me, there are three areas of entry. So the first one would be here, but I wouldn't trust it. And then the second area is this area right here, which is 25,927, and last but not least, 25,909. Okay. You may look at this and say, "Hey, there's no way it's gonna drop to 25,909," and I'm gonna say, oh, "Well, let me remind you." Like at around 10:39 a.m., you had a big drop. So a big drop like this, you don't be surprised. What time is it? Around noon. It's almost noon. Like right around noon, it goes up and then a quick drop, just like that. Usually, when you see price acting like this, um, there's gonna be at least another one sometimes throughout the day. When there's a big drop like this, there's gonna be another big drop. It's either in the afternoon session or later in the Asian session. Those moves come in pairs. So I'll say watch out. If it doesn't come today, it's gonna come tomorrow, sometime this week, for sure. It's like a rapid drop. Okay. So I'm trying to see if I can position myself. Now that we are here, now what I can do is try to see if I can put an order here to go long. Okay. So that doesn't negate that
Order
it can
submitted.
go back and drop against me. Okay. So you gotta pick an area to go in. Alrighty. So we'll wait and see what it does. Yeah, so when market is trending like this is usually how you should trade it. You should look at it from an order block perspective. Um, and then when price is going sideways on the range, you have to take a look at the extreme, like the relative equal lows and the relative equal highs. How it's going to sweep through those to get from one point of the trade to another. So there's different strategies you have to use, you know, and even on a daily basis. Like for example, you see price trending up like this. There's a high probability during the Asian session or London session or New York session tomorrow, price may retrace into a trending session in the previous day trending session, either to the 50% or to 25%, to the top 25% if there is a breaker. Okay. I mean, those are small little nuggets and secrets that that will prevent you from suffering major drawdown. Like for example, I know me putting a trade here, there's a high probability I'm gonna suffer a major drawdown. You know, but it could also tap it, tap into it a little bit, and then resume higher. You cannot let one trade define you in your trading career. Okay. we'll wait on this one. So let me show you why I'm convinced that price is gonna go higher. See this one again, it got into the gap right above this bullish order block here. So yeah, that's gonna happen, man. You just gonna miss the move. It's either it's gonna retrace too much against you, or you're going to miss it. See that right here? That's a miss. Sometimes you can tell, sometimes you cannot. But most times when the price is getting close to like a target, it usually moves really fast. It doesn't retrace a whole lot. You usually get such a big dip retracement if it's like near the 50% of its intended target. So let's pick, I'm gonna do something here. Let's see. All right, so I'm gonna take this whole area right here and highlight it. So my point is, once it's getting close to the target, price usually tend to accelerate. It's a very short, quick retracement, and boom, up it goes. So let me take it up to 15 minutes. Trying to see if I can have a good panoramic view. Me and the spellings today. Alright, so this is the target. The price is trying to get to this level right here. 26,100. Let me put it even. I said 26,120. Yeah, but the thing is, sometimes you don't wanna put it a little bit higher. You wanna make sure you put your target a little bit lower. So what I'm gonna do is grab one of those and grab an horizontal line and then put it at 26,100 even. Come on, man, give it to me, give it to me. There you go, just like that. Also, there's a relatively equal high over here. So price may just dip into it a little bit and go higher, or it may use this area and then just fall off and go lower than that. But the thing is, to me, price has been falling off so much, and it falls all the way down here, come back up, fall again. So my thing is, I think it's just gonna keep going up until it clear out these highs. Once it clear out those highs, either later on in the afternoon session or sometimes overnight in the Asian session, it's probably gonna go sideways and then drop lower again, and then not and then anything beyond that, you're just gonna have to wait and see. Oh, easy again. I see your comment. Yeah, I'm looking for long at this point. Yep, going long right now. So I'm waiting for price to drop, okay, and then to go long because you don't want to chase price. You want to make sure it drop. So that's the relative equal high. Let me make sure I can take it up to the daily. Oh, the what I'm using right now it's Ninja Trader. I'm using Ninja Trader right now, and that line that I drew is this called horizontal line. So I kind of like put it right on top of it. So yeah, we're going long most definitely. And to be honest with you, what 26 130 is probably going to be the target for the rest of the week. Oh, I'm using NQ. Yep, I'm using MNQ. MNQ is the micro. which is so the NQ is $20, the MNQ is $2 per points. Good question, Easy Gains. Let's see. Let me show another screen that I'm looking into right now. Oops. I'm navigating through all this. There you go. Can you come up? Yep, that's perfect. Yeah, right now you should be going long. No shorts. No shorts at all. So yeah, so I have this screen all lined up. So I usually use this screen, kind of like give me an idea what's going on with NQ, S&P, or Nasdaq. Sometimes it can give you a good hint on where to enter. So, for example, you take a look at Nasdaq and how it dropped. So, well, first of all, let me start with this. So, S&P is 500 companies. Nasdaq, I believe, is 100, and Dow Jones is 30. So, which is why Dow Jones is so flaky. That it's all over the place. The reason why you see Nasdaq as 100 and it's pulling so much is because there are so many hedge funds that put so much money into those small companies. You have Apple, Microsoft, Nvidia, all these companies. So that's why it's pulling so much. And then you have those 500 companies. I mean, this it's like a heavyweight. So usually, when you see the ES is leading, or like is leading, it's probably best to go with ES. That's leading. Even though I tend to trade the Nasdaq, but I try to see what are the divergences, right? That are here. So for example, you have this line here. So you see Nasdaq is kind of flat, and when you're looking at the ES, it kind of like went a lot lower. So if you trading the ES, the S&P, and then you see that in at this time around 1040, price did not significantly go lower, but for the ES it significantly went lower. You can use that as a particular divergence so you can get in. Getting some errors. Yeah, so you use those divergences to get into your trade. Um, it's not an end all be all, it's more like a confirmation rather than, oh, if it's going lower than this point, then I'm gonna go long. It's just that it's an extra confirmation. We know we're going long. We know it's bullish. So you try to say, okay, which area should I get in the most? So if you look at, if my screen wasn't so slow, I would have been able to show this a lot better. So let's use this one. See this one for Nasdaq. We know it's bullish, so it's going up. But for the S&P, and this is what I'm trying to explain. At the same time, the same area, we have price going much lower than that. Maybe not that much. See, it's not even flat. So I'm gonna draw two lines, and that's gonna help with the divergence on that. So that's that. So you have the divergence. So you have Nasdaq going up, and you have the S&P going much lower. So when you look at this and then you see price keep going up, don't be afraid. Just use one of those order blocks here, and bam, and then you'll be able to trade in and then to ride it higher because Nasdaq is going up. This is where most of the money is. This is where the tech stock is. So you can kind of like get in to go longer. I explained that. I'll try to explain that in a much better video. But again, it's not such a big deal. You just gotta take a look at it, and it's like a confirmation tool. Let's drop away from that. Man, he did not get in. That's okay. So taking a look at the daily, let's see where we at. Okay, so it seems like in order for price to reach this high again, we have to clear the low from here, and it did. So yeah, we are most definitely aiming for those. But again, you have to look at it from a gradual perspective. So you have to make sure you get to your target here, and then wait for a confirmation or price may drop a little bit lower, get back in, and then, or if you don't want to get back in, if you don't want to close the trade, you can add some more trade, some more contract onto it to ride it a little bit higher. But I would not wait until you get all the way to the tip. I would use the bodies as a target because those wicks, depends on where you are, which broker you use. Those wicks can be different for different brokers, different country, different company, so on and so forth. But the bodies do not tell the lies at all. So yeah, I would target, if like extremely bullish scenario, 26 514. But I usually scalp. I don't hold my trade for so long because of what's going on around the world. And yeah, yeah, yeah. So I try to keep my trade short and to the point. All right. Now talking about the world, let's see how my trade is spinning out like that right now. So yeah, it looks like it's gonna come back. Um, if it's well animated, it may get into my trade. If not, I think it's just gonna get on this level here and bounce back up again. Man, and the moment I said it bounced back up without even getting there. Come on, man. All right, so taking that area, it may be able to get there. We'll wait and see. All right, so now talking about the world, let's take a look. So let's take a look at this guy right here. So we had, I did not want to show this first, but I will get there. So who was this written by? We have somebody in The Economist that wrote an article late last year about what's coming up around the world, and then this is all in combination with using the Banner cycle, everything, every tool that you can have in your hand. You want to make sure you can use all these tools as possible. Um, the Economist putting this out, looking at seasonal tendencies, everything that can give you a competitive edge on this market. Use it to your advantage. Okay, so I'm not gonna bore you to death to read through this article, but I want you to keep a few things in mind. So we have bullet number three here. I don't need to spell it out. But we have bullet number three and bullet number two. And sometimes on July of this year, we're gonna have bullet number one, which is America 250th anniversary, combined with sporting events. So I believe we have the World Cup later on this year around the summertime. So you combine these two things going on. So I will watch out for the summer. So the summer might get really hot. So be careful with that. So we have with bullet number two, geopolitical drift. They arrested somebody from South America. I'm not gonna mention the country or the name of the person who got arrested, but if you're following the news, you should know. And if you're watching the screen, you should know somebody got arrested. And I don't think there's gonna be a lot of big deal coming out of that, but I think it's gonna be the fallout of that. That's gonna create a lot of problems. And then obviously you have that going on, problems in Europe, a lot of political unrest, and then you have China opportunity to take over the Taiwan island, which is where TSM is, that manufacture the chip for. Also, you have Nvidia there, I believe. So that can greatly impact your trade. So you cannot separate the news that's happening on the macro level to what's going on in your actual trade. Okay. So everything is all interconnected. You cannot separate everything. You cannot just say, "Oh, it's conspiracy theory, yada yada." Nah, everything is all related, and it's gonna affect you right here on this chart. Okay. So I want to make sure I kind of bring this to your forefront, to your attention. So let's see what price is doing here. It looks like it's dropping. Looks like it's gonna drop some more. I mean, I hope it doesn't drop all the way here, but it might. Okay, so I want to navigate away from that. So this article is by the if you type in the Economist launches the world ahead 2026 in your Google chart, you should be able to get that. But this is what I wanted to focus the most. See this graph? It shows everything that already been happening and that is about to happen. So we have that 250th anniversary for United States coming up. Let's see, where's the soccer guy? Right around, you have that soccer guy kicking the ball, and you have an arrest here. This is you have the handcuff of the arrest of the person, and remember this came out last year, late last year, like on I think it was on October November time frame, I believe. Let me check when it was published. Oh yeah, November 10. There you go. Yeah, and you already have that going on. So now we know what that handcuff means. And then one thing I noticed about this graph, there's a lot of these. I don't want to say the word because YouTube get very sensitive, and there's a lot of syringes, and there's also a lot of robots walking around. So we got one, two, three. Yep. So we have three robots. Yeah. So we have about three dog robots. Um, if there's gonna be any civil unrest, so those robots will be deployed. And I believe New York and Philadelphia, I believe they're about to sign a contract to get some more dog robots. Okay, so keep this picture in mind. And then you have the stock market, which is this is where everything we're the most interested in, right here. Can I zoom in more? Yep. So we have the graph going up and down. So as you can see, there might be a lot of things that's gonna influence your chart. There might be a lot of up and down movements. So there might be a lot of volatility, just like we had a lot of volatility earlier this year. Not earlier this year, earlier last year when Mr. Trump became president. So as long as he's president, there's always gonna be all of that. A lot of back and forth, a lot of wild price swings. And obviously they're trying to chip your brain. This is Elon Musk trying to chip your brain here. I'm gonna save this one for last. And then obviously with the WAR going on the east side and on the west side. So this is kind of like what I'm seeing in this picture here. There's a lot more stuff I can't depict yet. Like I'm still trying to understand what are these guys doing. There's a submarine here near the coast of. Would that be Greenland or would that be United States? Well, Greenland, United States trying to acquire Greenland. So, but again, I'm saying all of this. It could be good news or bad news for a portfolio. Just watch out. Don't be surprised when these events happening. I mean, I think they're posting this stuff here just so we can be numb to it. And I don't want you to be numb to it. I just want you to be aware so you're not surprised. So you get tricked out of your position. Like let's say for example you're investing into the stock market and then you see a lot of news from MSNBC, CNN telling you the world's about to collapse, yada yada. Just don't be surprised. Like it's just part of the course. They're trying to bring everything down so they can bring it back up. Okay, so we have that going on, and then we have premium price insurance is about to increase. and a lot of people will get denied will get denied for the healthcare medical bill. So you have that big red cross in there. So the Affordable Healthcare Act, Affordable Healthcare Act will probably go kaboom, or bust, or they're probably gonna try to revamp it, but it's not gonna be the same. I still don't know what this red wine means, but it's very interesting how they can squeeze so much information in one simple little graph. Okay, and then obviously you have satellites and a lot of pills. Oh yeah, there's definitely a lot of pills floating around. So I mean, are people gonna be so depressed that they're gonna depend on pills? I don't know. Pills and alcohol, okay. And then you have boxing matches, obviously sporting events, to keep the population dumbed down. So there's a whole lot of stuff going on here. And then obviously somebody with a rocket aiming at who? We don't know. And then there's a lone actor here. Probably is gonna create some a Black Swan event, or it could be somebody related to terror and East, trying to create some problems here. Um, so yeah, interesting graph. So let's get to this one. Um, if you think this is all conjuncture, it's all uh, no, doesn't mean much. Let me get you that. So you the cargo, the Chinese cargo ship, okay, converted into concealable, that word, and then yeah, and that word. So there you have it. Is it near us? Is it for Taiwan? We don't know, but here's an article about it. Keep that in mind. Everything is linked. Everything is interconnected. All right. So I probably lost a lot of you now at this point. And again, how is this related to my trading? How does this matter to my trading, man? This is kind of like related to the Banner cycle. Um, like let me see if I don't think I can zoom in on this one. Let me try. Oh yes, I can. So with all these political things going on, geopolitical things going on, I still want you to focus that this year can still bring a lot of good values to your portfolio, to your trading portfolio. It's just when you have all these events going on, wait for price to drop, buy a dip. So if you have any difficulty figure out, okay, all right, people say buy the dip. Like, what is the dip? Like, when do you know it's the dip? I mean, at this point, if you've been watching my channel, you should have an idea what the dip is. But let's just take a look back at it again. Okay, so here's the dip. This when I put that line right here, let me zoom in so you can see. So when I put that line right here, I say a price may just dip into this one and then go back up. That's the dip. This is an area you can buy. When you have all these news event going on and everybody think the market is going to tank, and people are going to be poor because they're going to steal money from your 401k, they're just not trying to trick you out of your position. Okay, so buy this dip right here. If you're not comfortable with that, just like I did here, put on order. When I have my portfolio, this is what I do. Every 3 months or 6 months or so, I kind of take a look at it. I say, all right, what is a good particular buy zone area, and then I just put a limit order. Okay, and that's what I do. But the only difference is between trading and buying stocks. I don't think I put nah I don't put any like a limit loss or like a stop loss or anything. So I just put a buy order. I just buy. Yeah, I don't just keep buying average in. Nah, it's not very efficient. So this is another area. If price violently drop, this area right here, where it may drop into that area, okay. And if you're really, really, really concerned about, okay, what is the dip? All right, so take a look at all that. Now this is the part where patience come in. So we have price overnight during the London session make a low, went back up, did not make a lower low. Okay, in this area, and if you have the patience, if you want to wait, what you can do is put a fib. Okay, all right. I'm anxious. Price is going up right now. I feel like I'm gonna miss out on anything. No, you ain't gonna miss out on shit. Price is gonna be here. Just this particular area right here. You see all this back and forth trading efficiently. This is the 50%. So I'll wait for price to drop. You can put a buy order here. I mean, if you
Order
really
submitted.
want to do so, or what you can do, if you think price is gonna drop even more, you can wait for an area to get in and then put a short order, and then you can ride it along the way. And then while it's going down, you can come back up. Now, this is an advice for investment, okay, not for trading. Now, if you want to trade this, and if you think it's going to drop, and again, I'm not saying it will drop, I'm just saying if you think it's going to drop, you want to make sure that price drop below this low first, go back up, and then get into a gap somewhere around here to ride it even lower. But at this point, this baby is not going lower; it's going up. And yeah, I know. It looks like it's been going up and up for a while. Nah, it hasn't. It's been dropping mostly. So if this baby is going up, all right, let me take that out. What
Order
time is it?
canceled.
All right, so it seems like my fill has been denied. It's been denied twice. All right, so it's noon time. Usually at this point, what I would do is wait for 1:30 to engage the market again. Because what I'm seeing right now is that it reached a particular area, it went up, did not go much higher than that. It did not significantly way higher, but now it's returning lower. And I'm not saying it's gonna go lower for the rest of the day, but there might be a deep retracement coming. Okay? But this might be a reclaim bullish order block. Now you might say, okay, all right. So out of all this stuff, which one should I follow? Which one should I do? Which one should I do? So is it a weekly and bullish order block is gonna go buy higher, or it's gonna lower? It's buy, 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 buy. Keep on buying. Oh, good question. Easy gain. If I'm a economist or a trader, so I'm not an economist, but I'm more of a trader than an economist. So reason why I was reading this article because it was very interesting, very fascinating, and I figured I should pay attention to it. Um, and this is my point, Easy Gains. You don't want to disconnect what's going on in the economy, actually, with the political events going on from the stock market. I mean, I know a lot of people are saying, yeah, they're not connected. Yes, the Wall Street and Main Street are not connected, but the economy itself is connected to the stock market. Like you getting poor, the value of your dollar when you go to the grocery store, and all that stuff. Yes, the stock market is not linked to that, to your wallet pretty much. Yeah, because if you're feeling bad, if you lose your job, it's better for the stock market to be honest, because they can buy back more shares. The money they will spend on operation for you as an employee, they're gonna reinvest it in the company. It's gonna look good on the balance sheet. So the stock price will go up. If the stock prices go up, which is part of the S&P 500, then the futures market will go up as well. See, everything is all interconnected. So you cannot neglect one or the other. So some of them may have an inverse relationship. Just like I just explained, you as an employee, when you lose your job, bad for you, but good for Wall Street, good for the company because they can save money and then they can rehire somebody for a lower price. But yeah, to answer your question, I'm more of a trader than an economist, but it's all connected. Any other good questions? So I'm trying to see what's going on with this guy here. So what I don't want is get in here and then for price to yank me out like it did right here. Because with my experience trading, once you see this once, it's gonna happen again. And there's a high probability it's probably gonna happen right at 1:30 p.m. Eastern. But looks this is very good price action though, except for that particular area. Yeah, let's see. That particular area can be very tricky right here. But yeah, Monday's trading was atrocious. Like, yeah, Monday, oh my goodness. I mean, there's some good price actions there, but whew, Monday was bad. Like this was really bad. I might as well just
Order
zoom out of this
canceled.
so we can see much better. Yeah, Monday was beyond horrible. I mean, at least to me, my trading approach, what I was expecting to see, like it was every now and then some areas kind of like some areas kind of like give me a little bit of a leeway, but nah, yeah, I think that was the only area I was able to trade successfully. Then everything else was a hot mess. Like this whole area was a hot mess. It just kept punching higher and higher. And at some point, I knew it was going to drop, but I just couldn't pinpoint what time it was going to drop. Usually, price start reversing like I want, like around 10:15, between 10:15 and 1:30 p.m. I know it's a huge window, but it's usually price usually reverse like around those time. And yes, the market move based on time and price. The time has to show up first. See, if it wasn't for time and price, I mean, you wouldn't get all this at 9:30. 9:30 shows up, you got all this mess. And after 11:30, you usually get that London reversal. And then this purple area right here is a liquidity void based on a NASDAQ old contract, which is the December 25, 2025 contract. Oh, I'm glad I remember that. So, um, when, how can I say this? I'm trying to say this the most succinct possible. When you have liquidity, like when you have gaps, like liquidity voids that has been there on a weekly basis or the daily basis, never delete them. Always keep them there because this purple area is referring to an old liquidity void area of an old contract. Let me see. Let me put it on the weekly, and I gotta run. I got a quick errand I have to run. Let's see, but I want to show you this before I go. Come on, 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 come on. So right now for Nasdaq and S&P, we are on a March 2026 contract. So usually those contract they get a little bit more expensive over time. You see that particular this is a weekly chart. See that particular purple area that I was showing you earlier, that was in this area right here. Let me highlight it. You can't see it. Now you probably will never hear this anywhere else. So that purple area was this area right here on the December 25th contract. I chose not to delete it. So I keep it there because I know price will still refer to it. Okay? So remember, That purple area right here, it was in that particular blue area right there. And then somehow, because the contract get more expensive, the whole price shift up, and then the gap now is higher. I mean, price refer to this new gap, but this old gap here, because that old gap was static and it was locked in, it never shifted, it never moved, which is why you can see price dance around it. And I'm gonna drop to the 1 minute, and I'm gonna show you how price was dancing around it on Monday. Come on, come on, come on. Show me Monday. Show me Monday. Was that Monday? Yeah, maybe it was. Let me zoom out. Yep, that's Monday right there. There you go. So that purple shaded area was that was an old liquidated void, and the moment it top off on top of it and it started falling off me, my thing is I felt like price was so weak it couldn't get on top of it, so I started going short a lot earlier, and I threw my stop loss a little bit too close, and then yanked me out right here. But we got above it, keep going lower and lower. Okay, so there we have it right here. And as you can see, it's respecting all the levels. So, and then as the Fibonacci, obviously I grade the entire liquidity void right here, and price still dancing around it. Get around it, got above it, and then drop lower, and then got in that 25th percentile here, and it started zooming higher and higher from there. So when you use this, the Fibonacci, along with the weekly liquidity void, you'll be able to navigate yourself. You'll see why price is acting funny and funky at one certain level. Why is it spending so much time at one certain level? So you'll be able to see, like, why was it doing all of this? And then once it got here, it bounced back up. That explains it now. If you didn't know, now it explains it. Why did it go sideways here and then go up and then drop and then go higher again? It's a bullish scenario. So go back up again. And then it goes up, dump into that 50% of which is half of that liquidity void, and murder she wrote from there, and go up and up. Yep. Was that Tuesday? Yeah, I think that was Tuesday. And then drop into the 75% or near the 50% here, then the 75%, and then up. So it's still referring to it. I figure I'll drop that gem right here. So go back to your old chart, and now I'm gonna lie. So if you think I'm lying, let me show you this. I know sometimes it's kind of hard to believe. Like, that's an old liquidity void from the weekly. Come on, man. What are you talking about? From the old contract? Why old contract? What contract are you talking about? Okay, let's do it then. Let's do it. Okay, so the contract right now is 226, and I'm gonna pick NMQ 1225. I mean, if it's fake, if I'm wrong, I hope I'm wrong. All right, come on, keep loading. Boom. Okay, it's a whole contract. What's the contract is based on a 3 months basis. So you have December contract, March contract, I think June contract, and then September contract, and then a December contract. Okay, so it's like 4 contracts throughout the year. So the previous one was a December 25th contract. So I had it there before, and I kept it there. But as you can see, price at this point is showing much lower because that contract is cheaper. Now we're getting to the current contract, which is MNQ 326 contract. Now that contract is more expensive normally. And as you can see, it's still here, but as you can see on Monday, and price is still referring to it many times. Don't get rid of him, man. Keep him. Keep him. Especially the weekly ones. Yeah. The monthly one, most certainly. Yeah, if you see any gaps, like in the monthly gaps, if you see it there, just take that gap and just stretch it for the entire year. For the entire year, maybe even until the next year. It's gonna refer to it at some point. But the weekly gaps, definitely keep those. Okay. So with that being said, I am going to close up shop and I'm gonna leave you to this to marinate on it. I hope you trade safely, and if you miss anything, go long. Peace. Enjoy, everybody.